receive dozens of calls and emails each week from investors all across the United States who've lost money as a result of an investment or strategy they purchased through a brokerage firm or financial advisor, and they're wanting us to help them determine if there's something they can do about it. Now, while not everyone who loses money investing was wrong or is entitled to reimbursement for their losses, many times financial advisors and stockbrokers either make mistakes on how they manage an investor's savings, or they mislead an investor into investing into a high-risk financial product in order to earn higher commissions. In those cases, you may be entitled to compensation for your losses. Most of financial advisors will attempt to sell investors either a particular strategy or a particular investment product. Sometimes there's nothing wrong with doing that. But all too often, the investment being sold is not the one that's really in the investor's best interest. Many of these investments are layered with hidden fees or undisclosed risk that makes the investment unsuitable for most, if not all, investors. The most important rule to remember when evaluating an investment that's being offered to you is that if it sounds too good to be true, it almost surely is. Even financial professionals are often convinced that a certain investment they are selling will somehow defy the economic principle that more return can be achieved without taking more risk. That simply isn't the case. And so anytime someone is trying to sell you an investment, either a product or a strategy that they believe will somehow give you a high rate of return without you taking a high risk, that's a sure sign that it is either a fraudulent investment or at least being misrepresented. You should also be cautious with any investment that is overly complicated or confusing. If you don't understand it, and certainly if your financial advisor selling it to you can't explain it appropriately, you simply should not invest in it. You should also be very cautious of any investment that is not completely transparent. Investments should be transparent in both how they operate and how they are valued. All too often, investments are sold as needing some level of secrecy or some level of being opaque so that they can operate and be the most profitable. And while that might be true for a few hedge funds out there, for very sophisticated investors, for the vast majority of investments, that is not what you should be in. Investments that are opaque, that can't tell you everything about how they work and how they are valued, are not investments that most investors should be in. If you've lost money in any of these types of investments or other investments that you think were misrepresented to you or not appropriate for you, we may be able to help. Shepard, Smith, Edwards & Kantas has been representing wronged investors for over 30 years. We have more than 100 years of combined experience in securities business and securities law. If you've been a victim of a mismanagement of your investments or some type of fraud, please call us today. We'll provide you with a free consultation. Our team of trusted and experienced attorneys will analyze your case and will let you know if you have grounds for recovery.